G'day folks, Jim here from AudJpy Forex. It is Saturday the 17th of October. Well, the markets have just finished. The strong retail sales figure for September failed to ignite any of the markets on Friday really, and they generally finished flat. But looking ahead, the coming week sees a thin calendar, but with a lot of central bank speakers, and it will be the US election, the stimulus package and the vaccine headlines which are going to dominate the price action for the coming week, I think. Also note that Brexit's coming towards the sharp end, and sterling will probably be pretty volatile. But in the meantime, before then, as I say, it was all pretty flat. And if we look at the heat map, there's a lot of blue, as you can see, signifying indecision amongst traders. There are a few things that are looking quite interesting. Dollar yen in the short term looks as though it could head a little bit higher. We'll go and have a look at that in a minute. And the Aussie also, so potentially buying Aussie yen may be a decent trade, not for an awful lot early in the week, but it is looking as though it could head higher, and I kind of like that on the cross, although the longer term charts look less decided, and I think if we do get this right, you should be taking profit quite quickly. Elsewhere, the commodities are chopping around but going nowhere fast. The dollar index is looking fairly neutral. I think it's going to be fairly choppy, but it has got an interesting formation on the 4-hour chart, so we'll go and have a look at that. And I also kind of like the stock markets, and the Aussie market in particular could be of interest this week. So we'll start out by having a look at the dollar index. Okay, so here we have a dollar index chart, and it's chopping around, not doing a lot. Either side of sort of 93 really. It's coming up against resistance up at this sort of 93.90 level. It's currently sitting at 93.70, having returned from its lows of this time last week, where it's down at just above 93. Now it could well be that we continue just to chop around here for a while, but we've got this resistance here, and I'm not sure if we might be in the early stages of building a reverse head and shoulders. If that's the case, if we can take out this sort of 93.90 level, then we can expect a measured target of from the low to the neckline, somewhere back up around here, this sort of 94.70, 75 level. The charts aren't particularly showing that at this point in time. The 4-hour charts, which we have here, not showing us an awful lot. If we go back, we go and have a look at the dailies, they aren't showing us an awful lot either really, and the indicators are pretty flat, so it could be that we just chop around. But I think it is worth keeping in mind this 93.90 level, and if we do break above there, as I say, we could go back up here, and we're going to find resistance here at this 100-day moving average, which is at about 94.60. That seems somewhere off at the moment, but I think it is worth keeping in mind. And if we go and have a look at a euro chart now, we can see the inverse of that. So here we have an hourly chart of the euro, and you can see the neckline here sitting just below the 117 level, with a measured target. If we were to get there, that's about 150 points from the top 118.30 down to 116.80. So we're looking at 150 points below there. I can't really see that at this point in time. The hourly charts are absolutely neutral. The 4-hourlies pretty much the same. They might be pointing very mildly higher, but to be quite honest, I think for the euro we're probably just going to see more directionless choppy trade, possibly with a mild downside momentum. And I would think if we were to get down to this 116 level here down here, which probably 116 figure 10, we should probably be looking to take any profits if we see them. On the top side, well, that 118 figure 30 is still going to be very, very toppish for it, I think. In the lack of, we've got not much calendar detail, as I say, this week. There are some central bank speakers, but overall, I would suggest that trading the range between sort of 118 and 116.10 is probably the way to go. And currently at 117, we're probably sitting pretty neutral. So I wouldn't be too biased in either direction. Just take a quick look at sterling. So here we have an hourly chart of sterling, and it was up and down between 128.60, 129.60, pretty volatile on Friday because of the Brexit headlines that kept on coming out. But the 4-hour charts not really showing us an awful lot. The dailies are equally, they're very flat indeed. So I suspect we're just going to chop around here for the time being, and it will just be headline driven. I don't think I'd be too involved here. If anything, you'd have to think that sterling possibly comes a little bit lower if there is going to be a no-deal Brexit and the UK gives up on negotiations with the EU. That probably isn't going to do sterling much good, so I'd probably prefer to sell rallies above 130, but I'd have a stop loss put in place pretty much above this high here. That's sort of 130.80. So if it goes above there, I'd be quite surprised unless we get something very positive coming out of Brexit. But I'd prefer to sell it, I think, if anything, and keep a tight stop loss in place. We'll have a quick look at dollar yen, which is interesting in the short term at least. It's really doing nothing, but I'm just wondering if this is kind of a reverse head and shoulders. It's only worth 50 pips from sort of 105 up to 105.50. So if we broke this level and broke the 200-hour moving average, we could possibly see a move to 106. Not really looking for very much, and I'm not too enthused by the trade, but there is a possibility there. The hourly indicators slightly positive, perhaps, as are the 4 hourlies, but it's be a slow to fly. We have got the Japanese CPI on Monday, but overall, the daily charts are not suggesting that we've got any amazing move coming anytime soon. But just for 50 pips, it might be worth buying it on a break of that neckline. On the Aussie, now the 4-hour charts actually do seem to suggest that we might be forming a bear flag, but we need to take out this minor support level here. And if that bear flag came about, it's probably worth about 70 or 80 pips on the downside, which would take us back to about the 70 cent area. But the 4-hour charts kind of look a little bit basish, so maybe this support will hold. The hourlies also look mildly positive, so I'm just wondering if that be the case, maybe Aussie yen, we'll have a look at that in a second, maybe Aussie yen might be a short-term buy for a move a little bit higher. But as far as the Aussie itself is concerned here, it looks as though we might just be trading sideways, and if it might be just a dollar yen move, if dollar yen can squeeze higher, that could take the cross a bit higher. So the Aussie yen chart actually looks very similar to the Aussie chart, and it might be that we've got a bear flag coming, but the 4-hour indicators suggest that maybe we can possibly hold on to this support and maybe see a bit of a squeeze higher. But I think if we got up towards sort of 75.20, if you do buy it here with a stop loss basically below this this trend support, or even below this low here. But if you buy it here, I don't think I'd be looking for much more than 75.20 or so, and then I'll probably be looking to sell it again. The daily charts are really very flat, not showing us an awful lot, and it may be that I'm just looking for inspiration at the moment here, but they're not suggesting anything. So it could well be that we just continue to trade near the current range, and maybe the thing we should be doing is buying it sort of just below 74 and selling it just above 75, and looking for that range to continue. Now, moving along to the stock markets, which I think are much more interesting than the currencies at the moment. And here we've got a 4-hour chart of the Aussie, the SPI. And as you can see, since late May, early June, we've been in this consolidation phase. And right now, we're sitting right at the very top of it. And I suspect that we can possibly look to be moving higher. I think the market's beginning to price in the chance of an RBA rate cut on the 3rd of November. The 4-hourly charts are not doing a great deal, but they have corrected back from being oversold, but we've still finished above 6,200 for the week. The daily charts are looking mildly positive, and we've broken and finished the week above this 61.8% FIBO. Now we really need to take out this level here, this just above 6,200, which it looks as though we have done actually. And really, there's not an awful lot of resistance now until we get to this 76.4% level, which is at sort of 60, well, let's call it 6,500. That's a long way off at this point in time, and a lot depends on what the US markets do, of course. But if anything, I think this is possibly the best trade on the board. If we fail to make any headway beyond this sort of 6,200, 6,220 level, then we're probably going to go back into the range for further consolidation. But right now, I kind of like the idea of buying dips. The weekly charts have been very positive and maybe starting another leg higher after becoming neutral for a while. So it's worth keeping an eye on, I think. And as far as Monday goes, well, it's not showing an awful lot, possibly a little bit of strength. If we can take out this 62.20 level, then I think we can probably head towards 62.50, possibly even further on Monday towards 6,300. But an awful lot depends on risk sentiment, of course, and that's changing with the wind. The US stock markets, this is just a 5-minute chart of the S&P 500. And as you can see, that saw a late sell-off on Friday, pretty much after the US close, really. The futures kept going for an hour. But so we did sell off really quite dramatically, I think. But it is only a 5-minute chart. On the hourlies, we came back down. We failed really to take out the 100-hour moving average and have finished near the 200. And the 4-hour charts are mildly negative. Sorry, the hourly charts are mildly negative, I should say. The 4-hourly charts are pretty flat. So we have to wait and see on Monday. The dailies are looking mildly positive. There's decent resistance, so really right ahead. We need to get above this 3,500 level to get back here. This is the all-time high, 35.90 or so. And then we've got above there, we've got long-term resistance up at this sort of 3,600. We need to go and look at the monthlies for that, I think. No, the weeklies are fine. So as you can see, we started down here. We've really it's not a major resistance, but we came up against various levels here, another high here. So I think if we did get to 3,600, 3,630, probably to lighten up on some longs there for another correction lower. But overall, I think the markets probably remain well underpinned in the hope of a stimulus package from the Fed as we head in towards the end of the year. Pelosi and Mnuchin are making noises that there will be a successful outcome, and I do think that's probably going to underpin the markets for the time being. I'll just take a quick look at gold, which isn't doing an awful lot at the moment, but it is consolidating, and as you can see, the support, resistance and support lines seem to be closing into a bit of an apex, and we might see a bit of a breakout, although I'm not at this point in time looking for anything too dramatic. On the top side, 1930 seems to be a decent point of resistance, and on the downside, this sort of 1880, 1875 level seems to be the support. And we're sitting pretty much in the middle at the moment. And I think right now I'd probably continue to trade that range. Right here at 1900, I wouldn't be too involved. If we got up to 1930, I'd probably be a seller with a tight stop loss, say about 1940 really. And on the downside, if we got below 1875, I have a stop loss, well, 1865 or so. I wouldn't want to risk too much either way. The 4-hour charts are doing nothing. The dailies equally doing nothing. If anything, though, the weeklies do hint at further downside potential. And if that's the case, it looks as though the 100-day moving average comes in here near our support level, so 1870, 1875. So yeah, keep a stop loss under there, or because I think if we do head lower, we can possibly head back to this 1850 level. So as I say, keep a stop tight under 1870. So that's about it for the coming week. There's not an awful lot of inspiration this week, I'm afraid. We'll have a quick look at the calendar. Now, there's not a whole lot on the calendar for the coming week. We have got some important Chinese data today, headed by the Q3 Chinese GDP, but also the retail sales industrial production numbers. But there's a lot of central bank speakers on the agenda, well, really throughout the whole week, and beginning today. We've got ECB President Christine Lagarde. She's going to be busy. She'll be speaking 1, 2, 3 times today. So that's going to keep the market on its toes. But the focus really will be Fed Chairman Jay Powell. He's going to be speaking along with various other Fed speakers and also Bank of England speakers. Bailey's going to be speaking. Cunliffe's going to be speaking. So that'll be Monday. Looking ahead, Tuesday we get the RBA minutes, the Chinese PBOC interest rate adjustment. That's about it. We got the housing data from the States on Tuesday as well. Wednesday we got the preliminary Aussie retail sales and the UK inflation data. More central bank speakers. Thursday looks pretty thin. the RBA Assistant Governor GbpUsd, he's going to be speaking. And then on Friday, it's really going to be down to the PMIs, the flash PMIs, which are going to dominate the action. Although we do start off the day with the Kiwi Q3 CPI data. So, but that'll be about it. So there's not an awful lot to go on. As I say, we're getting pretty close to the election now. And Donald Trump's Twitter account is going to be pretty busy. Hopefully we'll get some positive news on the US support package and possibly even some positive headlines on a vaccine, although I've got my doubts there. But we wait and see. Anyway, listen, I'll leave it there. Have a good week's trading and we'll talk to you next week. Cheers.